Welcome back to Your Average Investor. Today we're talking about DJT Truth Social. This is Donald Trump's stock. Off of the news that Donald Trump survived an assassination attempt yesterday, the stock soared in pre-market this morning from $30 a share all the way to a peak of $54.50 a share, selling off in pre-market, plummeting at open, kind of hovering around the $40 range until close, and now it's dipped down to 36.8. So the question is this a good time to buy? Should you buy the dip or the dip pop dip, whatever this is, right? It popped, it dipped, but the dip is still above the pop, or excuse me, above the open or the close the day before. So technically this is still a pop. You know, we're up quite a bit over yesterday, $31 to $36. So what do you think? Is this worth it? Well, from my perspective, I would say no. I think that DJT is on a hype cycle right now, which is primarily due to Trump running for president. And as you can see here, they've got a market cap of nearly $8 billion on minus $350 million in income and sales of just 0.77 million. That's a really, really low number of sales. I can't see any viable path forward for this company, to be honest. And here's the reason why is as a social media company, it's basically just a copycat of Twitter or X. And I'm actually curious what you guys think. If you guys think that this is a viable social media company, let me know in the comments. And also, what do you think of Trump's VP pick, JD Vance? That's kind of an interesting one. But anyway, so it's just kind of a copycat of Twitter, where Trump built this because he got kicked off of Twitter back in the Jack Dorsey days. And initially there was a big surge of people that went over there, right? The people that wanted to hear from him. But inevitably what ends up happening is you have 100 plus accounts on Twitter or X who just repost whatever he posts there. They'll just immediately post it over to Twitter. So for the majority of people, there's no reason to go download Truth Social and be over there. It's like it's just one more social media platform to manage and to be a part of. And why would I want to be there when I can just be on X instead? And I think that that's how most people feel. So I think they're going to struggle a lot to continue growing. And I'm saying this even if Trump wins the presidency, right? Like if he wins the presidency, I'm sure that it will accelerate some user adoption, but they don't offer anything unique in comparison to Twitter, to X, since Elon Musk took over and made it a lot more of a free speech type platform. So I'm quite turned off by this, but from a technical perspective, I think there's some interesting things to look at here. So let's just look at this from a technical perspective, because fundamentally I don't think it makes sense, but we do have this nice floor set up here around $30 per share and a very strong resistance around $50 per share. Currently, where we're sitting in after hours is right about 36.5 bucks. Let me add one more price line. That's 36.7, right about there. So that's where we're currently sitting, right? Big pop, sell off, and now we're sitting right around here. And if you notice, that acted as pseudo support a couple of times, right here, and again right here, and kind of again right here, right? So we've got this little potential base of support that's going on right now. And if this support does break, then I think we have pretty strong support in this, $30 to like $27 range. I'd say that's another strong area of support. Now, if that happens to break, then probably we're moving back down into this $15, $16, $17 range. And I mean, overall, this is where I think the play goes, right? Is if you think that Donald Trump has a really strong shot of, and this is not financial advice, nor political opinion, but if you think he has a really strong shot at winning the presidency this year, then likely DJT starts rallying again over the next couple of weeks, and possibly even all the way up until election time, right, till around November or so. So we've got a few months for that kind of a play to build. Now, would I buy in immediately right now? You guys know my philosophy, my take on this is I like to see a little bit of a base form first, and then I like to get in, right? So actually this would have been a really interesting base to get in on. So if you're like, hey, you know what? It's down at $30. This has been pretty good support, so I want to buy in on this base and go for a play, that would have been a decent base to play on. If it comes back down to $30 per share, I think the same thing. Now, if a base starts forming here at about $36, $37 a share, I think that's a good opportunity to maybe take a position. And one more thing I like about this is the premium is just absolutely juiced right now. Now, looking at this premium, it's going to be reflected as if, or based on the current price, which is 36.6, right? So that's why it shows this is where the out of the money ones are. But remember, market closed closer to $40 per share, and so that's why the option contracts are priced a lot more evenly right here at the 40 strike. So at the 40 strike, you're looking at $800 on the put or the call side. That's at the money. So I think that that's a phenomenal amount of premium to protect some downside. So let's just say tomorrow at market open, I wanted to buy 100 shares at $36.50 a share, or whatever. I could immediately sell a call 37 or call 38 for about $800, maybe $700, right? Maybe the premiums died down a little bit, so we'll call it $700, and that protects me with downside all the way down to $29 per share. And the upside is great too, right? So let's just do a little bit of math here. So if I buy in at 36.50, so we'll just say 750 divided by 36.50, I'm making about a 20% return over the course of 40 days on those contracts. Now, the other way I could do this is I could look a little bit further out and say I want to go all the way out till November. This I don't think is as good of a play because you're tripling the amount of time on your contract, but you're not even getting close to triple the amount of premium here. Like, just not even close at all, right? You can see the premium on these 40s is only about $1,100 compared to this $800. So you get a little more premium, but not a ton. But that could also be a good thing if you're wanting to play some calendar spreads. So as an example, if you think that, hey, you know what, I think that this is a sell the new situation and the price is going to struggle for the next couple weeks, but over the next few months it's going to move back up, then maybe what you look at doing is buying these call 40s, and then let's just say like maybe right here, something like this, you could sell these call 39s against them, right? So what this is going to do is it's going to result in a net debit. So this is going to cost you $440. And this actually is now that I'm looking at it, this is how I would probably play this. And again, this is not financial advice, but if it were me, if I was playing it, which I haven't committed to play it yet, I'd do something like this. So now I've got this position where I've got a call 40, and instead of costing me $1,100, this is only going to cost me $440. The other thing that's so great about this is, assuming the play goes my way and the price of DJT stalls for the next couple of weeks, this contract is going to expire worthless, and then I can go out and I can sell another one a couple weeks later. And so what that might look like is selling, let's just pretend I'm selling here and I want to get another one that's sold for roughly the same price. It was like $500 or something like that. So maybe I would sell like this one right here, right? And so then that brings my cost down to just $200 because I've made back another $600 in premium. And so maybe I do it one more time and I can get another little bit of cash out of it. And now I've all of a sudden made money selling those calls against the call that I have. The obvious detriment to this position, of course, is that if I do this and the price continues to go up, then I'm on the hook for selling somebody 100 shares of DJT, and I don't have the shares yet. I've just got my contract, so I'd have to then exercise my contract to cover that. And that, of course, would result in a net loss because I'm at a loss here, and then I would lose another $100 on this spread because I'd be purchasing my shares at $40 a share and then selling them at $39 a share. So it'd be about a $550 loss. That's my thoughts on DJT. I'm curious to know what you guys think of it. As always, hit that subscribe button, help this channel grow. We'll catch you next time.